Good morning and welcome to the University of Illinois Research Park and Enterprise Works webinar today with two experts on PPP loans. There have been many changes happening and we're all tracking as best we can what's been happening federally very quickly as this program continues to evolve and be able to really help small businesses throughout the US and right here in our community in Champaign County. And our tech companies are some of the participants. We've been getting regular updates from one of our entrepreneurs in residence, Dennis Beard from Sarah Ventures, who not only has a perspective from a venture capital side, but also as an accountant, as his background was. And we're also joined by Don Elmore from the Small Business Development Center in Champaign at the Champaign County Economic Development Corporation, who offers almost daily webinars on PPP loans and has free counseling for the different small businesses across the community. So welcome, Dennis, and welcome, Don. They're give us some content today. Thanks.
All right. Thanks. Thanks, everybody, for joining. And for those who are joining later by watching the tape, this is one I've been actually looking forward to because I think this is very interesting. Desiree, if you can share the screen, that might be a good place to start. I was explaining to Kathy a little while ago, I started taking notes on this about a week ago, and yesterday morning I put together the PowerPoint deck and read it one more time, sent it over this morning, then opened up the new IFR that was published last night and already found one slide that's incorrect. So, Laura mentioned it's evolving. It's really evolving. Our accountants mentioned on a webinar I attended the other day, what's a week without changes to the PPP program? So anyway, we should be, let's go ahead and move up.
See this okay? It's showing kind of weird on my screen. So I don't, can you see the full?
I'm seeing the presenters look like you would probably be looking at, but.
That's what I thought. Okay.
Let me try it.
Here we go. Is it good now?
There you go.
Thank
right.
you.
Excellent.
Sorry.
Thank you. No worries. I'm not going to read down this list all of a sudden, but these are sort of the checklists of the topics that are impacted by the latest guidance. So if you hadn't heard, up until last Friday, first the House of Representatives, then the Senate, then the President all approved some changes to clarify and add flexibility to the PPP loan program. In some cases, it'll be obvious why these changes were made, and sometimes it's maybe not quite so obvious. But if I were to summarize it in a nutshell, this is all pretty good stuff, pretty good news for small businesses. There are a couple things that aren't clear yet, which I'll touch base on the end, and I've got at least one big fat correction, and it comes in early, or at least what I think is probably a correction to the information here, so we'll talk about that on the first slide. Don, is there anything you want to add to just the overview here?
No, I think that probably covers everything.
Okay, Desiree, next slide. Okay. The original one, and I won't read through all this, but many of you know this came about the Paycheck Protection Program to offer companies with less than 500 employees in the U.S. a chance to borrow some temporary money, essentially 2.5 months worth of payroll for salaries under 100,000 a year to help them get through this tough time due to the COVID-19 crisis. And there's an opportunity to get much or all of the loan forgiven, and depending on how you spend that money. And if you don't get it forgiven or all of it forgiven, what is not forgiven will roll forward on a 2-year loan with 1% interest. So the big news is we've had some changes that were signed in by the President after Congress overwhelmingly. I think the House Representative had one vote against this bill, and the Senate approved unanimously. So it was a wonderful example of everybody kind of getting together and agreeing. Let's move to the next slide. So knocking off where are these changes, this is the slide that is probably wrong. And some of it's right, some of it's wrong. The first interpretation I had as of yesterday morning, which was information that had come out late last week, was that they were going to extend the loan application period to December 31st, 2020, to the extent funds are still available. And as of June 3rd, there were 150 billion still available. I checked this morning, and I think the number, it's still over 100 billion still available. I think it's around 105 billion maybe. So there's quite a bit of money left to get. But last night, this SBA came out with an adjustment to an addendum to the interim final rule, which is great government speak. I love that title. I think you could take the word final out, but the interim final rule, and it still shows that the last date that you can apply for a loan is June 30th. So if you have not applied for one of these, if you're watching this and you have not applied and you think you should, you're going to need to get the application in really soon. I wouldn't wait until the end of the month. I'd get started now with the bank to apply. I'm not sure why the other guidance I had received from a leading law firm had shown that June 30th where they picked that, or December 31st. But there's still quite a bit of money left. I think a lot of the bigs have gotten in and got their applications, so this could probably go a long way. I wouldn't be shocked to see them extended to June 30th. There's still a big number available. Next slide. Yes, go ahead,
Just a
Lauren.
question, Dennis, that I know I asked Don in another call. The amount that you can request is still the same duration of funding that the PPP would cover, despite this being extended to be a longer program, correct?
That's correct. And so you can still apply for essentially 2.5 months worth of payroll based on a couple of different periods, but most companies base it on 2019 average payroll. With some adjustments, you have to exclude the portion of compensation over 100,000. But payroll is really, I should use the word payroll costs, because it's not only the payroll, but you can add to that health insurance and retirement costs of the employer and state taxes to that. And Don, I don't know if you have anything to add to that I might have skipped, but in a nutshell, that's it.
No, there are some resources you can go to get complete lists, but most things can be included, benefits, to a certain extent, salaries and bonuses, even if they're reasonable. The main things that cannot be included are federal withholding.
Yeah, federal
Even
withholding.
State payroll taxes can be included, but not federal.
Right. And if you think of the math in your head, you could borrow 10 weeks worth of payroll, but the original plan was your forgiveness period was on 8 weeks of spending, but you could include some non-payroll costs, a few things, specifically rent or interest on your mortgage and utility costs. And but you had to kind of cram that into 8 weeks, and we were having companies, if you can imagine everybody knows about the restaurant business, who were basically shut down for a while and now are slowly coming up to speed, haven't hired all their people back yet through no fault of their own. And they were saying, I borrowed this money and I can't spend it yet, and my 8 weeks are running out, and so I'm getting a double whammy. My business is down. I borrowed it. Now I have to pay it back instead of getting the anticipated forgiveness. And that's not what Congress intended. So Congress came back, and I was actually kind of shocked that they extended all the way up to 24 weeks from 8 weeks. So now you get to count your spending, same eligible costs. So your payroll costs plus utilities and rent, or if you have a building mortgage or building mortgage interest, but you get to use 24 weeks up to the amount of the loan to apply for the forgiveness. So this is a great benefit. And if you're not in the restaurant business and you've been operating more or less like a lot of our software companies, more or less on plan, this really gives you probably everything you need to get 100% forgiveness of the loan. If you already have the loan,
You're not eligible for 24 weeks. You're still eligible for the 8 weeks or 2 months of salaries. It's just that you can spread them across on a longer duration.
You can take more time to spend the money to get the full forgiveness. And by the way, if you already have your PPP loan, you can still use the 8 week period. And I know some companies that got the full forgiven amount spent in 8 weeks because they've been growing and they had a substantial amount of utility and building costs. But you can opt to change it over to 24 if you need it. And I had a couple companies I'm working with that were not going to get the full forgiveness, but because of this change now, it's a great addition. On this point here, the minimum maturity of the loan. So if you don't get the full loan forgiven, you had 2 years to pay the loan back. It's 1%. It's still a really good deal. Congress, when I looked at the original CARES Act bill, it looked like Congress intended for a 5-year payback. And the Treasury and the SBA decided that was too long, and they had wiggle room for interpretation from what Congress said, and they came out with a 2-year payback. I think a lot of people complained about that, saying, hey, we don't know if we're going to have it may be months before we really get up to speed and would have the wherewithal to start paying back on a loan, and 2 years is going to make that loan payment very large. So for new loans, if you apply for a new loan now, you will automatically get a 5-year maturity. If your loan has already been received, it's between you and your bank to renegotiate that from a 2-year to a 5-year. And given the percentage of forgiveness that we're going to see, I don't know that this is really a huge issue, but it's nice to know that if I don't get full forgiveness, I've got 5 years to pay it back, and the interest rate will remain at 1%, which is amazing.
And Dennis, that date is June 5th. So before June 5th, you don't automatically get the 5 years, but June 5th or later you do. So,
and
I agree. Almost all of my clients have no intention whatsoever of having any trailing loan. They want to get 100% of it forgiven.
Right. So it's looking that way for most of our companies too. I do have a couple of companies, and I don't really address this in the deck, who think they have a possibility of having a really good year. And the board and management, we'll see if they hold, have decided that if we have a really good year, we want to pay it back and we won't apply for forgiveness. And so they may enjoy a 5-year payback period and feel good about that. I think their view is we don't like the concept of taking free money if we really didn't deserve it, but that's a different issue, kind of an ethical issue, I think.
Hey, Dennis, it might be a good time to point out, because I've also had some clients that have said, you know what, I don't know if I can meet the payroll requirement, but I do have rent, utilities, etc. I'm not going to worry about the forgiveness part.
Mm-hmm.
But it's important that people know you are still required to spend this money only on those 4 things. It doesn't mean that if you don't care about forgiveness, you can go buy equipment or anything. So it's still payroll, rent, utilities, mortgage, interest. Otherwise, you're violating the terms of the program.
And there's one minor tweak to that, and that is you are allowed to pay interest on other business loans that were in place on February 15th. That would not lead to forgiveness, but you could spend it on interest on business loans that you had in place back in February. For most of the companies we work with over here, they don't have loans. They're early stage, so they're getting equity investment. But for companies with other equipment loans and things, that would be helpful. We can move to the next slide. One of the critical factors in determining how much you can be forgiven, since Congress intended most of this to be for payroll, Paycheck Protection Program, it was a sliding scale. It wasn't a binary on or off situation, but if you did not spend at least 75% of the funds in the earmarked for the forgiveness, on at least 75% on payroll costs, your forgiveness was going to be ratcheted down. So more or less pro rata. And given that some businesses have had trouble ramping up to full speed and some have had trouble hiring their employees back, Congress decided to get more flexible, and now the requirement is 60%. So when you combine adding 24 weeks and you only have to have 60% of the spending on payroll, that is another nice flexibility added on getting the forgiveness. And I did confirm, there was some question earlier in the week whether the rule was going to be the same. Is it a sliding scale? Do you have to hit 60%? If you don't get to 60%, is there no forgiveness? And they clarified in the IFR amendment last night that it's a sliding scale. If you got to 54%, you would get mostly forgiven, but not quite all forgiven. There's another factor that we're going to address here in just a minute. So another factor that impacts your forgiveness is whether you are able to restore your employment levels. And there's an exception to all this coming up on another slide, but on this particular slide, the original rule said that you had to restore to your February employment levels by June 30th to 100% qualify for the forgiveness for whatever you're applying for. And they've decided to extend that to December 31st. I don't know if we have any restaurant operators here, but restaurants are having a hard time getting their employees back for a couple of reasons. One, there isn't full volume yet, so they don't really need them in most cases. And second of all, the unemployment benefits are very generous through July 31st, depending on where you live in the country. If you're in New York City, it's probably not enough, but in the Midwest, the regular unemployment plus a $600 a week supplement from the federal government makes it pretty generous. And if you're on tip income and with lower volume, you probably are way better off just keeping your unemployment. And so that's what most people are opting to do. And the rules are relaxed on having to hunt for a job. And restaurant owners that I'm speaking to are totally sympathetic with that. But they can use some help. But even if they want the help, they aren't necessarily able to hire everybody back. So Congress heard about that, and they added it. So this next slide here shows that there are some other adjustments as well. If you are unable to rehire, you can fill out the form in the application for forgiveness and get an exemption because, hey, I've been trying and I've not been able to get everybody back. The other issue, which is very real, is just due to the nature of your business, you're not able to return to that level of business activity. So if you see restaurants that were totally focused on an indoor dining experience and they can't have an outdoor offering, or they have a very limited outdoor offering and a very limited delivery and drive up, they can apply and say, I've been limited. And restaurants are an easy example to talk about, but this impacts a lot of businesses, certainly certain types of production, factories. I don't know if anybody has any other examples that are worth bringing up.
Dennis, unless I missed it on the last slide, sort of the third piece of this is if you can show, and all these, by the way, the SBA is supposed to be providing guidance on how exactly you document and show these things. Mm-hmm. But the other one is that in addition to not being able to rehire, if you're unable to fill those positions, you can't find qualified applicants for those positions, you also won't get dinged for that. But I've just been recommending, because there hasn't been documentation on how you do it, just say keep your documentation. So if you have employees that refuse to come back, have an email trail that shows that you can do it. Keep applications from applicants that weren't suitable for the jobs. You'll probably already have the level of business activity documentation that you can show. And for now, just keep whatever you can get together and sort out what you need later.
That's a great point. I was looking at that amended IFR that came out last night, and it gets into that a little bit. It completely agrees with what you're saying, although I wouldn't call it firm guidance. I think we'll see that when we see the amended forgiveness forms and instructions. But yeah,
that's said in there that to expect additional guidance.
Yeah, exactly. Next slide. So when do your payments begin if you do have a loan? If you're applying for forgiveness, you don't start making your loan payments until after the SBA pays the lender for the forgiven amount. If you don't apply for forgiveness, your forgiveness application is due within 10 months after the expiration of whatever period you're using. So for companies that use the full 24 weeks, we're looking at sometime next year. And if you don't apply for forgiveness, you've got to start within 10 months after the expiration of your forgiveness application period. So this is very generous. Originally, it was going to be start your loan payments at the end of this calendar year. And now for a lot of companies, depending on how quickly the SBA gets the forgiveness approved and pays the bank, for many companies, it could be next year before you have to start loan payments. And like I said, this may not be a big issue because a high percentage of companies are going to get the full forgiveness now. Next slide. There's a payroll tax deduction deferral that's available under the CARES Act, which is also the overriding congressional act that got this all started. And there was, should I say, a lack of clarity or maybe even interpretation that you could not take advantage of some deferral of payroll tax that was offered by the CARE tax if you also got a PPP loan. And they clarified that with this new legislation so that you can do both. You can defer, you'll need to talk to your tax accountant about this, but to the extent that you would otherwise be able to defer, now the PPP does not get in the way of taking the deferral of the payroll tax. So this is just another nice cash flow benefit small businesses can get while we work through this downturn.
And Dennis, my understanding that originally you could not defer any payroll taxes after you had basically closed your loan after that period.
Right.
Now they've extended it through the end of the year.
Yeah.
And the deferrals don't start until next year. Right?
Yeah.
2021 and 2022.
Yeah. So it's a good thing. And for some businesses that are heavy on employees, it's a really nice benefit. So here are 3 bullet points on things that that were obvious to me that I was kind of looking for that are not clarified yet. I think I mentioned this on the last the last workshop we did. The way the IRS rules are written, if you are getting if expenses are being paid for which you're getting covered by a forgiven loan, you cannot deduct those expenses on your tax return. Well, the CARES Act said forgiveness would not be taxable, but this essentially makes them taxable because in a sense, it's going to reduce or increase your taxable income or reduce your taxable loss by not being able to deduct these payroll expenses and these utility expenses. And Congress did not intend for that. Unfortunately, that has still not been clarified. And from the webinars and articles that I've read, Congress needs to act to amend the IRS's guidance on this. So the IRS has kind of drawn a line in the sand and said, well, that's fine if that's your intention, but you've got to give us a bill so we can act on that. And we're talking about 2020 income taxes. So I'm guessing from what I've seen, they're not going to get in a hurry to make this change, but maybe in July and August is what I've kind of heard back that we might see an amendment. So that's kind of a big deal. So if you've got a company that is generating a loss, but this forgiveness would put you into a gain situation, you could end up paying 20% or more of that back to the federal government and maybe some state taxes as well. So it could have an impact, and that's not what Congress intended. So I expect that to be amended. Second point on there, the utilities expense definition, still not really very clear. And people are asking a lot of questions. It's obvious that your electric bill to the shop or to the office and your natural gas heating bill to the shop and the office count as utilities. But what about fuel? What about internet? I think a lot of people are pretty sure that your internet and telephone costs are included in that. What about your employees' internet costs while they're working from home? And this is not very clear. So Treasury and the SBA are being pressed by people that care about these things, are piping in and saying, hey, give us some guidance on that. So hopefully we'll see some guidance on that, maybe with the rules on the forgiveness application. And then the final point, which is the big one, the new forgiveness form is not available yet. And there's nothing to do right now, really, except keep documenting your spending and keeping an eye on how you're doing this, and watch for new information. We'll try to stay on top of it for you. You can, the next slide shows the resources. I believe it's the next slide.
Hey, Dennis, before you jump to the next slide,
Sure.
Other questions I've been getting, just so people understand how complicated this can get, under utilities and even rent.
Mm-hmm.
So utilities, another one that is included is water. And I thought, okay, well, that's not that big a deal. But what if you're a larger company or a manufacturer and your water bill is huge? That could make a big, big difference.
Yeah.
And it is included. I've also had questions that are not answered is, does rent only mean property rent? What if you're renting equipment? Is that eligible or not? And it's not clarified. And generally the advice is just document everything, as you said at the end there, document everything and then talk with your lender. They're going to be the ones basically signing off on your forgiveness amount. But a lot of this stuff, we have not gotten clear answers from the SBA.
Yeah, that's a great point. I've seen that question come up in a couple of the webinars I've been on the rent, and it has not been clarified. Oh, one thing that I didn't list that did get clarified in this interim final rule is you can't prepay the rent and take that prepay. It's not as big of a deal now because you've got 24 weeks to spend the money, so you can pick up quite a bit of rent that way. but people were saying, gosh, I have 8 weeks to spend this. Can I go ahead and write a check for next month's rent, the following month's rent? And they made it clear that if you're on the 8-week program, you cannot do that. And they did clarify there's been some clarification on the incurred and paid. And if you incur payroll expense during your 24 weeks and you pay it by the date it would normally be due. So if the payroll is after the 24 weeks, but it's paid time that was incurred by your employees or salary was incurred during the 24-week period, that is allowable. So I was going to say on this resources slide here, I really like going to the home.treasury.gov site, and there's a red band across the top that says COVID-19 related documents. You click on that and there's a long list of general information, list for borrowers, list for lenders, and they have the interim final rule updates, and they put the dates that these were issued. So I've been trying to click on things that have come out in the last few days, every week at least, if not more often, and this is good stuff. And the banks will be coming out. We work a lot with Busey Bank, and Busey called a timeout a few days ago on the forgiveness applications and said, hey, this is all changed. I think they sent it out Friday, end of day. So just hang tight. And we're waiting, and I'm sure they're waiting on guidance from Treasury. And then when they get that guidance, they'll give guidance to all their customers. And I have not heard of any other banks that have been able to move anything any faster. With that, we can open up for other comments, questions, insights, anything you might know, corrections.
Hi, this is Catherine at EdTech. I have one question. So our PPP loan got approved actually in early May.
Mm-hmm.
So first question, I'm wondering whether we can get the extension as well from 8 weeks to 24 weeks.
My understanding from reading that interim final rule as amended is yes, you get the 24 weeks. What you don't automatically get is for anything that's not forgiven, you don't automatically get the 5-year payback period. Now, maybe with 24 weeks, you'll get it fully forgiven and it won't matter. It would be up to you to talk to your bank to see if they would extend any unforgiven portion to a longer loan than 2 years.
Okay, so the short answer is we can using the money to pay for the payroll, the utility to get that full amount forgiven.
Yes.
That's the question is, if we can get that some flexibility, can we kind of like saving this part of our money, not using the first 8 weeks, but later period?
Yes.
So
yes.
I see. So even let's say we got approved in May 1st, right? But we not pay for the payroll in the May or in June, but we start to pay the payroll starting like September and October, which is allowable.
Right.
Okay.
That's right. And it was designed just for that situation. I talked to companies who were saying, gosh, we're going to run out of the 8 weeks. Could I just pay my employees a bonus? And the short answer to that is yes, you could do that, but is that a good economic decision? And it kind of depends on the situation. So now you don't have to necessarily do that. If a bonus isn't going to get you really much, it's nice to give your employees some extra money, but you have to worry about payroll in September, right? So this allows you to just keep things more steady or even ramp it up later.
I see. The reason our situation is we do have some SBIR at this point. So I talking to like program manager, they are kind of like flexible, even we don't do the work technically in this month. But if after this SBIR finish, right? They complete, so there we may face like a gap period. So if somehow we can using this PPP loan to cover that, that will make us more like.
Yeah, that's perfect.
Perfect.
Yeah, it's a good situation.
I see. Okay.
Good.
And Dennis, I think you've said this, but rent as an eligible expense or utilities, those kinds of things, that could also be elongated. So if it was all concentrated to the 8-week period, but now you're paying rent over the course of 4 months, although that's capped of how much of the loan can be on rent, that's still something that gives you a longer duration of payments to be eligible. Yeah,
so it's a bigger percentage cap and it's a longer period that you can take that rent in. So it should be very helpful for a lot of companies, for sure.
And I've heard from a number of clients since the forgiveness period was extended.
Mhm.
They plan to use basically 100% of it for payroll and just make their forgiveness math that much easier and the documentation pass that much easier. It can be different for everybody.
Yeah.
But as you said, the extension was specifically valuable and I hope applied to those businesses that really couldn't take maximum advantage of this program because they couldn't bring their people back. So if they were using it for payroll, in a lot of cases, they were paying for them to stay at home, when in many cases they were getting more with their unemployment benefits and PUA to stay at home.
Yeah.
So it was kind of problematic.
Yeah. This is great because so in those instances, the employees will get to enjoy that unemployment at a time while the business is still slow. Then as they come off the unemployment after July, come back on to their regular pay, it'll be really nice.
Dennis, in terms of rent, think about a typical invoice you might get from the research park. You got some rent, you got some triple net, you got some utilities, maybe a broken whatever thing that gets passed through. The utilities seem to be utilities. It's interesting to think about when they're occurred and when they're paid and things of that nature, because you're paying the landlord back. The rent seems pretty clear. Any thoughts on sort of the triple net portion? That's
a great question. I saw that come up in one of the webinars because their triple net portion included things like snow removal and lawn care. And the accountant said, well, it's not very clear in the guidance, but we think the intent would be to not include those sort of non-rent, but utilities included would be okay. So you're probably going to have to sift through that and try to sort it out if it's made obvious. The other thing to keep in mind, and I think we discussed this on the last one, is be prepared to have the documentation of your rent arrangement to show either at the time of the forgiveness application or upon a subsequent exam. I have heard that there's probably going to be some de minimis rules on certain very small loans that probably won't get much scrutiny, but I don't want to speculate on where that line is drawn. But it makes a lot of sense that the government auditors would say, hey, loans under, I'm making this up, so it's not, loans under $50,000 won't be scrutinized or something like that. I would be prepared until I had clear guidance to defend it. So Alan, I guess the answer is I'm not sure. And the webinar that I attended where that question came up, the CPAs weren't sure either. And I read quickly and I didn't see anything in that new IFR this morning.
Your common area maintenance charges would still be part of your lease obligation. So it would seem that would be considered rent. If it were a gross lease, all of those things would be included.
Yeah.
If it's a triple net, those are separate, but it's essentially part of the same rental agreement that you have. It's just gross would cover all of those same landscaping, snow removal, all of that as part of facility costs. So it seems like it shouldn't get penalized, but
yeah.
That's a really good point. I'd looked into this for a client and, it would be easy to say, the typical components of triple net, property tax and insurance pieces would not be covered. But as you said, if you have a gross rent, as a tenant, you're paying for those anyway. And if you're only paying one number, that number would be included. So it's unclear. If you break it down and itemize what triple net really means, that you can make the argument that some of those items shouldn't be included. But if you roll it back up, then they almost certainly would be.
One of the accountants was talking in a different context. They were talking about the utilities. And I can't remember the specific type of utility. It was a little bit gray. And they basically said, hey, if you need that to get to the full forgiveness, I'd plan on using it, but document it very well and see what happens. I mean, the penalty, it doesn't seem to be too bad. As long as you're upfront and you provide all the documentation for it, you could end up getting a portion denied and have a loan if that's what it takes to get there. If you don't need it, then don't worry about it. But I agree, Laura, I think, especially if it's not major pieces, throw it in. I mean, maybe the lawn care and snow removal is a bad idea because you would get that in a gross lease. Insurance is sort of an interesting one. And right, if you had a gross lease, the property taxes. So that's good comments.
That's been my same advice. I've had questions about, waste removal. Would that be included in utilities? An interesting one, you mentioned the internet. And I think it's generally considered that internet service would be covered, but something like web hosting is unclear. You know, are the fees for web hosting included?
Right.
But again, the advice is document it all, work it out with your lender when forgiveness time comes, and see where it goes.
Yeah, that was a question. The 24 weeks helped us dodge that issue, but I have a portfolio company I work with that probably spends $50,000 a month on Oracle for hosting their secure data and multi-sites, and they were thinking, well, that's kind of an easy one. And well, maybe it is, maybe it isn't. So now that they have 24 weeks to just spend payroll, that isn't going to come into play. It's a huge expense for that small company. Any other fun stuff? One thing that came up, this is sort of a little bit on, a little bit off. I've noticed in the IFR that they brought up a topic that I've been trying to get some clarity on, and I'll be darned if the language isn't very clear. And that is, if you applied for an EIDL loan and got the advance up to $10,000, it's up to $1,000 per employee at the time of the loan. It seemed unclear, but a lot of people were saying, if you get that, then that is deducted from your PPP loan forgiveness. And I've heard somebody in one webinar explain that, yeah, if you get that $10,000 on an EIDL loan, that's $10,000 you're not going to get forgiven. So count on having at least a $10,000 loan to pay back. The way it's written here, it looks like if you took an EIDL loan out before your PPP loan and you used it for payroll costs, that portion is going to have to get paid back. And the rest of it, you could use the EIDL loan to pay back your, or the PPP loan to pay back your EIDL loan, but you're going to get $10,000. So I was just disappointed that did not get clarified. And I've got one portfolio company that got a $10,000 advance, and it has an EIDL loan in process, and they're not sure what to do. But it's a new one, so it may not apply to them. So I can't help you. Don, do you know more about that?
Yeah, and to further complicate that, and I was just looking at the new IFR to the section you were looking at, and it doesn't really help.
Yeah.
But the prevailing opinion from the people at the SBA that we talked to was that the issue with the EIDL loan starts with whether or not you choose to refinance that EIDL loan through the PPP. And in practical terms, in terms of who got their loans when, I didn't have any clients who had EIDL loan money before the PPP. Now that may start to happen now. And if you take that premise, then the issue of the advance is not relevant if you're not refinancing the EIDL loan through the PPP. If you are, you would take that amount out because it would not be part of the financed loan. But there have been, dissenting opinions that say they think that the SBA is going to deduct the advance from your PPP amount in a lot of cases, but I have not seen that happen with any of my clients who have gotten it. And quite a few of them have gotten the advance. So again, you need to be prepared and informed, but for now it seems like unless you were one of the rare people that did actually refinance your EIDL loan through the PPP, neither that amount nor the advance is really relevant to your PPP loan at all.
That's kind of the way I'm seeing it too, Don. And I don't know anybody that got the EIDL loan before the PPP either. So maybe it's going to turn out to be a non-issue for most of the companies.
So Don, this is Catherine again. So one clarification, we get the advance part before the PPP. Our EIDL loan is still in process right now. We haven't got that money yet.
Mm-hmm.
So you are saying no matter whether we decided to get this EIDL loan or not, they should be separate thing, right? So that advance part will not be deducted from the forgiveness.
That's my understanding, because you no longer have the option to refinance your EIDL loan through the PPP because your PPP has it's already in progress, right? Or already in place.
Yeah.
So my understanding is that whatever you choose to do with your EIDL loan will not affect the PPP at all.
I see. Okay. So yeah, since we're talking about EIDL loan, I have one question regarding this secured interest, because we are kind of in the middle of signing that document, And then they are saying if this total amount is over 25,000, they have like a secure interest.
Mhm.
But they don't specify what's that mean. I mean, they have say our property is in, I mean, collateral, but we don't have a list of the equipment list in that, I mean, agreement. So I'm just wondering how that will work, what kind of aspects we need to pay attention or take into consideration when we sign this agreement.
And I've looked at the loan documents, and that part is not very clear. I can even make the case that since the SBA changed the collateral requirements and raised them, actually they shouldn't be even relevant now. The collateral and personal guarantee requirements are for numbers that are higher what their maximum loan amount is. But I'm curious, and I can't get anybody at the SBA to tell me this, but that 25,000 number used to be the number above which collateral was required for the loan, but they changed it a long time ago.
Mhm.
So I wonder if really that's kind of an artifact and it never got changed in the loan documents, which is troubling to applicants. I've had clients that have asked about this. It's also not very clear. They don't ask you specifically to sort of pledge any collateral. They just, you know, pointing out that you're signing off on a security agreement, and you know, failure to pay means we have access to go after these certain, you know, assets of yours.
Yeah, that is troubling. I've not seen the detailed documents, but I have heard that there are a few things that might surprise you when you look at the documents for the EIDL loan.
In fact, I have a blank set. If anybody I just sent them to Alan yesterday. If anybody wants that, I can send that to you. The loan authorization documents.
Yeah, thank you, Don. I'm glancing through them right now, and you know, one of the interesting things is, you know, there's a provision in there that says that you can't, you know, issue bonuses to employees. So if you have a regular bonus system, you know, year-end bonus or what have you, as long as this loan is outstanding, you know, that language, at least on its face, says that you're not allowed to provide employees bonuses. So
And nor a raise to the owners.
Right.
yeah, exactly. Yeah. So, and I've seen a lot of discussion for a subchapter S corp. A lot of times you take a low salary and then take a dividend if there's cash available, and you can't do a dividend, it looks like.
Right. Yeah.
Yeah,
No
so-
dividend distribution.
Right. However, for, you know, partners, owners, and sub-S's, if they have a separate arrangement with their entity for basically wages as salary, those can be included for the purposes of the PPP. Those can obviously be included in that. But yeah, anything that's sort of in the K1 area can't be included.
Mm-hmm.
So,
Oh, go ahead, Catherine. Sorry.
sorry. So I guess my follow-up question is that what does that mean to company like us, because we are kind of, we don't know whether we should sign up those kind of application. Is one major reason is really because what's this collateral mean? Because it lists, because I have that document. I mean, it lists that the collateral includes the following properties and the borrowing owns, but they gave me a bunch of a list, but do not have any specified. Like, for example, they just say inventory, equipment, instruction, chattel paper. Does that mean all the inventories the company own?
So I guess my take on that, if I could jump in, is
Yeah.
that's probably going to be, just think of it as, instead of a mortgage on real estate, it's going to be, it's like a mortgage, but instead of on real estate, it's on all of your company assets. Just think of it as a security interest on all of your company assets. So if you don't pay on the loan, then they have that security interest that would perhaps allow them to jump in front of another creditor, such as a credit card company that might issue you a credit card. So it gives them a priority over a future creditor who might later loan the company money. So it's a sort of a priority thing.
I see. So then you mentioned it will be like a company owned all kind of assets, but will not including anything, for example, like the main stakeholder or owner's personal property.
Right.
Okay, I see.
Which a typical bank loan, they would probably also ask for owner's personal property or owner's guarantee. So it's a little better than what's typical.
And in the original EIDL loan, they had a lot more of that with, you know, shareholders and affiliates and all that, and they wanted a lot of documentation, but they dropped almost all of that in, you know, later application processes.
I think we're going to wrap up today's session. And if you'd like one-on-one counseling, if you have a specific business situation, I'd like to encourage you to work with the Small Business Development Center and Don Elmore as a free resource and expert on PPP loans. And Dennis Beard is one of our entrepreneurs in residence at the Research Park and Enterprise Works, as is Alan Singleton, who joined this meeting today as well. So please use our resources available in our community to help you with your individual company. And thank you, Dennis and Don and Alan, for adding your thoughts and reflections and research today on this program as it continues to evolve. Thanks, everybody, and good luck.